We're on the final stage where we're going to prepare our income statement. We have our trial balance that I've copied over from the last sheet. And it's here on the left. So now we're going to create 3 of our financial statements. There are more than 3, but we're only going to talk about 3 right now. The income statement, the statement of retained earnings, and the balance sheet. We're going to do these in a very specific order because we're going to use information from the income statement to create the statement of retained earnings and information from the statement of retained earnings to create the balance sheet. All right, let's start. Our income statement is revenue minus expenses. Equals net income. Okay, so let's go over here, revenue. And I'm going to take this directly from my trial balance. We're not going to worry about debits and credits right now. We'll just make everything be a positive number. So our revenue is $70,000. And then I'm going to list my expenses. And my expenses were $8,000. And that's going to give me my net income, which is revenue minus expenses, or $62,000. So it's $70,000 minus $8,000 is $62,000. And that's our net income. Once we are happy with that total, then we're going to put a double underline under it. That tells us that we are done. It's what accountants do. We do a double underline, tells us we're done. All right, the next is our statement of retained earnings. And the statement of retained earnings is a roll forward, like we talked about in one of the previous modules. So our roll forward formula, remember, is beginning balance plus increases minus decreases equals ending balance. Okay, so our beginning balance is going to be 0. You wouldn't know that. I'm just telling you that. This is our first month of operation, so our beginning balance is 0. Going forward, we'll have a beginning balance because last period's ending balance will be this period's beginning balance. But because it's our first period in operation, our beginning balance is 0. Then plus net income. Our increase is net income. We're going to use the $62,000 we calculated in the income statement. And then minus our decreases. And our decrease in our statement of retained earnings is dividends. So I'm going to use my dividends total for my trial balance. My beginning balance of 0 plus my net income minus my dividends will give me my ending retained earnings. This should be beginning retained earnings. All right, let's just move this so we have room to see the whole thing. All right. And 0 plus 62,000 minus 31,000 is going to equal 31,000. And that is our ending retained earnings, 31,000, and we're going to give it the double underline. All right, finally, we're going to do our balance sheet. And if you remember our accounting equation is assets equals liabilities plus equity. That's exactly what we're going to do on the balance sheet. We're going to make sure that our assets equal our liabilities plus equity. So if you can picture this flipped on its side, oh, I may have a thing where we can flip it on its side. Assets equal liabilities plus equity. All right, I don't want that. I'm going to change that back just so that we're not taking up so much space. But if you can picture it flipped on its side, that's exactly what we're going to do. So we're going to start with assets. And we're going to just list our assets. So the first one was cash. Remember, we can tell because our assets will be everything that starts with a 100. And our cash was $22,000. And then we have our accounts receivable. And that is $40,000. And inventory, which was $30,000. And equipment, which is $310,000. I'm getting all of these numbers from our trial balance, my asset accounts. Okay, so those are all of my assets. So then I'm going to type in total assets. And I'm going to add up my assets. And when I add them up, they equal $402,000. Okay, now let's go to our liabilities. And we have one liability account called accounts payable. We can tell because it's the only one with the 2, starting with the 2. And our accounts payable balance is $271,000. We're going to represent it as a positive number because we know we're in the liability section, so credits are positive. And then we're going to write total liabilities. And our total liabilities are just $271,000. There's nothing to add up because we only have one. Then we're going to do our equity. And we're going to list our equity accounts. We're going to start with stock, which is $100,000. All right. Our other equity accounts are dividends, revenue, and expenses. Now, if we go back, revenue minus expenses is net income. Our net income minus our dividends is our ending retained earnings. So basically, we have already calculated revenue, expenses, and dividend, or when we think about how they impact equity, plus revenue, minus expenses, minus dividends. And we call that retained earnings. So we're just going to enter retained earnings down here of $31,000. We don't have to list our revenue, expenses, and dividends because we've already accounted for them. So then our total equity is going to be, we'll add these two up, for $131,000. Okay, now comes the big check. Total liabilities plus equity. And we're going to add our equity plus our liabilities. And we get $402,000. So our total assets are $402,000. Our total liabilities plus equity are $402,000. So our balance sheet is in balance, and we'll give it the 2 double lines. All right. Remember, this is always a great way to check that you've done everything right. Your balance sheet should be in balance. Your total assets should equal your liabilities plus your equity. We are done with our financial statements. All right, I'll see you next time.